Laura, what rationale did the governor give today for this pause?
Sarah, the Governor, Phil Lowe, essentially said the government wants to wait and the Reserve Bank wants to wait and have a better look because inflation has clearly peaked and we can now see the effects of monetary policy operating on the economy. I think it's quite interesting to compare this statement with the statement he made in April when the bank last paused. There's a really noticeable change in language. At that stage, the bank was saying, look, we want to stop and wait because we've done a lot of stuff, but we not really sure that it's worked yet. That's taking a bit of a liberal
Yep.
turn with it. But this time he's saying inflation has clearly peaked and is on the way down. The economy is slowing. Large sectors of household spending are slowing. All of the factors that you would expect, and also that the labour market is not as booming as it was. So all of those signs, I think, show a real change in tone from the bank, and I would say, frankly, quite a lot of nervousness about what's going to happen next. I think what they're trying to do is really leave open the space, if you like, for them to raise rates again because they've only got one thing to hit, which is interest rates, and they want to have the capacity to do that, to fight inflation for as long as they can. But there is a clear concession in this statement today that the economy is on the downturn.
Now, in terms of what's next, because of course that's what people want to know is to what extent this is a pause, what can happen next. What are the measures that he's going to be looking at, that the bank will be looking at, to decide whether it's a single round pause?
Well, we've got a few statistics coming out, the quarterly CPI, the quarterly inflation number. They'll be watching the unemployment figures and consumption comprises about 55% of the economy, so they'll be very interested in the retail trade figures.
Now, what about recession? I mean, it's not in the language everywhere today, but did he obviously didn't raise it today, but what is the analysis today on the danger of recession?
Well, I think it sort of was there a bit, Sarah, in the language. He's saying the board is still expecting the economy to grow as inflation returns to the target, but the path to achieving this balance is a narrow one, which you sort of hear in a slightly high-pitched, nervous voice. At the risk of sounding a bit like a moaning myrtle, I think the government now really does think that we are heading for a recession, that there probably has been too much of a tightening, given that we've still got to see the wave of impact of all the interest rate increases over the last 12 months coming through. They are setting themselves politically for the prospect that that's going to happen. It might not be deep, it might not be long, but they've gone from thinking that it can be avoided to thinking that it's likely that the economy will officially contract.
Now, at the same time, we've got this larger than expected budget surplus for the government. So how does that play into the debate, the political debate particularly, about economic management?
Well, it's a bit awkward, obviously, because the figures from the Department of Finance suggested the surplus could be as large as $19 billion compared to figures of $4 just a little while ago. So people will be saying, well, why can't you spend that on us? For the moment, the government is saying, well, we can actually help here because if we reduce government debt, if we're not a demand on the economy, we are helping to keep the pressure off interest rates. Now, given that the opposition is saying that the government shouldn't spend that money, that actually helps them. But I think the language we've seen from ministers like the Finance Minister, Katie Gallagher, today suggests that if it is seen as possible and required to offer more cost of living assistance as the economy slows, and if the government thinks there's a scope to do it, that $19 billion is a better thing to have than not having $19 billion.
So true. Laura, thank you very much indeed for joining us.
Thanks, Sarah.